Now that I've issued the intent to lend letter, let's talk about something that unfortunately catches a lot of my VA buyers off guard, and that is closing costs. Now, why is that? Well, as many people know, the VA allows for 100% financing on a loan, but the VA has done a horrible job of explaining to veterans that there are also closing costs associated with getting a loan, just like a car loan. This chart shows you an average of what we see in closing costs. And in this video, I'm going to break them down for you. The first thing I'm going to share is an example of an initial fees worksheet. When you are ratified on a sales contract, I will send over 3 of these worksheets with different rate options and closing costs for each. Now that we know what it looks like, let's talk about some of the sections in it. The first section to go over, and the only one truly you need to know when comparing offers between loan officers, is the lender's fee section. This is where a loan officer discloses what their fees are for the interest rate. Notice how mine clearly tell you what the fees were for this particular rate option. If you're comparing offers and can't determine the fees this quickly and easily, that's a problem. Now, why do I say this is the only section you need to know? The reason is this is the only section that a loan officer has control over. The next section we are going to go over are third-party fees, and they are listed in the Services You Cannot Shop For section. These fees include a credit report fee, which is the fee associated with their credit report, an appraisal fee, which is the cost the VA currently charges for a VA appraisal to be performed by a VA appraiser, an appraisal reinspection fee, which doesn't happen very often, but we list it to give you a worst-case scenario, a tax service fee, which is one-time charge to make sure your taxes are dispersed correctly from your escrow account, which we will go into shortly, a flood certificate fee, which is a charge to make sure the home is not in a flood zone, and finally the VA funding fee. If you are exempt from the VA funding fee, meaning you receive VA disability pay, you will not have a charge in this box. Now let's go to the services that you can shop for and that are controlled by the title company listed on the sales contract. Remember how I said the only section you need to know when comparing offers between loan officers is the lender's fees section? This is why. When I list the fees in this section, I try to give you a worst case scenario of what these fees will be with the title company listed on the sales contract. I personally would rather you be pleasantly surprised that I estimated higher so that you're bringing less money than you thought, than extremely upset you are bringing more. Tough to get positive reviews that way. Some loan officers, and especially ones found online, do the exact opposite. Think about it. If they are trying to win your business, don't have a reputation to protect, and don't care if the fees are off at the end, they're most likely going to give you super low figures and worry about the repercussions later. Now let's go over the fees. The first is the owner's title insurance. Owner's title insurance is an optional charge, but highly recommended to protect you in the event of title defects on the property. Examples of title defects include liens on the property that they weren't aware of, errors in the public record, and even forgery. Next up is lender's title insurance. This is required when you get a loan and protects the lender giving you the money from the same issues we just went over for owner's coverage. After that, we have the insurance binder. This is a temporary document issued by the title company that provides proof of title insurance to the lender until the formal title policy is issued down the road. Now we are on to settlement agent fee. This fee is a charge from the title company to handle the settlement. After that, we have the title search, which is the fee the title company pays to a person known as an abstractor. An abstractor is a professional who specializes in examining public records to determine the legal history of the property's title. Probably didn't even know that person existed. If you're still with me, we are moving on to the pest inspection fee. This fee involves a termite or pest company to take a look at the property to make sure there are no wood-destroying insects like termites or even carpenter bees on the property. Even if this is still covered by the seller, we generally will list this as well, just in case it is your responsibility as part of the sales contract. Next up, we have the closing protection letter, which is a letter to provide financial protection to the lender or the closing agent against certain risks associated with the closing process. The last item in this section is the digital archive fee. Now, not every title company charges this, but for those that do, the purpose is to charge you for them to store your info electronically on their servers in case it was ever needed. The next section we are going to cover is to the right and pretty straightforward, and it is the taxes and other government fees section. The first is the recording fee, and this is a fee charged by the county or city you are purchasing a home in to record that you are the new owner. After that, we have the transfer taxes to purchase the property. Unfortunately, state, federal, they get their cut. Remember when I said some lenders will try to lowball their figures? This is one section that loan officers who aren't looking out for the client will try to do that in. Now we're going to go to the prepaids and initial escrow payment at closing section. The first section says hazard insurance premium, and while it says hazard, it actually means homeowner's insurance. You are free to get your homeowner's insurance through whoever you want to get it through. USA, Geico, Liberty Mutual, it doesn't matter. I still have to make an educated guess though, for what that is going to cost you, and it needs to be one for a year's premium at closing. This is another section where some loan officers try to lowball the amount. Keep that in mind if you see a number that looks too good to be true. From there, we go to the prepaid interest. This section refers to the amount of interest that accrues from the day of closing to the end of the month and is another area where fees are sometimes lowballed. You can see in this example we were closing in the middle of the month. Sometimes when I've been asked to review fee worksheets that a person has a concern on and seems to be too good to be true, a loan officer will often only put 1 or 2 days of interest in this box. And that's fine if you're actually closing at the end of the month, but if you're closing at the beginning, this box should have close to 30 days in it. And as you can see, it's pretty expensive. Moving on, we are now to the initial escrow payment at closing box. If this is your first time buying a home, that means is that when you make your mortgage payment, the lender will take your taxes and insurance and put them in an escrow account for you. Once the insurance or taxes are due, they will pay them for you out of the money that you have already put in. In this box, you'll see the hazard insurance reserve of 4 months. So in addition to the 1 year's premium paid up front, you also have to put in some months as part of the reserves. Moving on, we get to the property taxes, which are placed in the escrow. Depending on what month it is, determines how many months of property taxes need to be put in this box. The 2 bottom boxes that make up the worksheet include the proposed monthly housing expense and the estimated funds to close. The one on the left will show you what the payment will be, and the one on the right will break down the estimated final amount due at settlement. Hopefully you now have a better understanding of closing costs. One of the nice things about all loans is you can ask the seller to pay some and even all the closing costs, but this won't work on every property. Make sure and consult with your realtor to determine if this is a good option on this property. Now, as you can see, closing costs are pretty expensive. Let's go into a few things you can do to try to lower them. The first is to decide whether or not you feel comfortable waiving owner's title insurance. This is an option you have. Next, shop around for your homeowner's insurance. When you get a quote, run it by me, or better yet, please reach out to one of the folks I recommend. Finally, close near the end of a month. This will limit the number of prepaid interest days that are gathered up. That's it. I know this is a lot of information, but it's important to me that I help educate my clients on the home buying process. Please reach out with any questions. Thanks again.